Good evening. Below are the day's news topics presented in a listener friendly script. For each topic, I begin with a concise 3 to 4 line summary, then follow with the full detailed points translated into English exactly as provided. Topic 1 Summary 3 to 4 lines. U.S. Iran exchanges and threats around the Strait of Hormuz have sharply raised geopolitical tensions, sending oil prices up and Treasury yields higher while roiling markets. Markets face elevated short term trading risk from sudden headlines and potential liquidity moves. Political disputes over the legality and feasibility of U.S. blockade and fee plans add to uncertainty. Details. Overview. The U.S. and Iran exchanged airstrikes and retaliatory actions over the weekend around the Strait of Hormuz, severely undermining the ceasefire agreement. President Trump publicly announced plans to resume blocking Iranian ships and to impose a 20% fee on vessels transiting the strait, which intensified geopolitical tensions. Iran claimed it had closed the strait, but U.S. forces countered that transit remained possible. Energy market reaction. Geopolitical risk sent oil prices sharply higher. Brent crude rose roughly 5% in the 80s, and WTI also climbed about 5% to around $75, with notable intraday volatility recorded. Bond market reaction. U.S. Treasury yields increased. The 10-year rose to about 4.60%, up 2 basis points. The 2-year to roughly 4.25%, up 4 basis points, its highest since February 2025, and the 30-year to about 5.9%, up 2 basis points. The rise reflects mixed forces of safe haven demand and a reassessment of short-term rate expectations amid geopolitical risk. Equities and market sentiment. Rising oil and yields increased uncertainty, prompting equity declines and wider volatility. Commentators warn of higher short-term trading risk. Rapid price moves can be triggered by liquidity conditions and headline-driven alerts. Political and security issues. President Trump's announcements on fees and blockade revived debate about feasibility and international legal principles on freedom of navigation. The ceasefire agreement had already been weakened by repeat clashes. Near-term variables. Key economic releases this week, including core inflation data, Federal Reserve Chairman Kevin Warsh's congressional testimony, and consumer sentiment readings, could further influence market direction. In short, the geopolitical clash has delivered an immediate shock to energy, bond, and equity markets and materially raised short-term trading risks. Topic 2. Summary 3 to 4 lines. Analysts warn that a stubborn inflation backdrop will keep consumer prices elevated, with electronics such as Apple products and Nintendo Switch models expected to get more expensive. AI-driven demand for data centers is shifting semiconductor capacity towards servers, tightening memory supply for consumer devices. Consumers are advised to consider early purchases or alternatives like refurbished units. Details. Summary. Core point. Persistent inflation backdrop and expected electronics price rises. Cause. Massive AI investment has driven a boom in data center construction, sharply increasing demand for server memory, DRAM, and NAND. Semiconductor producers are shifting capacity toward data center demand rather than consumer devices, causing memory supply shortages. Impacted products. Game consoles, e.g. PS5, Nintendo Switch 2, tablets and laptops, e.g. iPad, MacBook, and certain smartphone and PC models have already seen substantial price increases. Microsoft and Sony have moved to raise or announce console price increases. Apple raised prices on some laptops and iPads by 15 to 25%, and iPhone price increases are also being discussed. Scale and duration. Some memory chip prices have reportedly spiked by hundreds of percent in short periods, and building new memory fabs will take years to remedy. Estimates suggest the shortage could persist through at least 2026-2028. Increased power demand will also pressure electricity rates, which can push consumer prices higher.